So Johnson & Johnson, we are talking about in today's context, but it also spans a number of different sectors where we focus on this one, specifically consumer branded goods, the healthcare space. Anyway, today we're talking about medical devices.
Yes, so it's got all that stuff like Band-Aids and all the rest of it, but it does have a division because it bought a company called Synthis, which is quite a big contributor to the medical, reconstructive and surgical equipment division.
In the context of Synthis, it's one of the world's largest healthcare companies with divisions across all of those elements that I've mentioned.
Market cap well above $300 billion. Let me see what it is, 323.
323, and we've got a price to earnings ratio of 22.2, dividend yield here of just over 2.7%.
Pretty good. It's the only company, I think, in the, big blue chip cap that has increased its dividend every year for 100 bazillion years and increased its dividend in almost every quarter since inception.
Which obviously will leave you smiling because of your exposure to it. So let's have a look at the share price. And
this is a 5-year chart that will come up. Yeah, looking good. A little bit of a sell-off at the end there, but 118.
And that's in line with broader markets. JP, let's get your sense on Johnson & Johnson.
It's the 9th biggest company in the US. So the first point is that it's always hard to come by growth when you are already the big gorilla in the industry. And as you correctly pointed out, Bronwyn, in 3 divisions: consumer goods or consumer products, the Johnson & Johnson baby products that we all know, in pharmaceuticals, a lot of drugs that they produce and distribute, and then the medical devices business, where even before Synthis, they bought the Pew, and that really bulked up that division for them. I don't know if you've ever been to Warsaw. I'm not talking about the Warsaw in Poland, but the Warsaw in Indiana. It's known as the orthopedic capital of the world.
I haven't, but it is indeed a very well-storied area for medical.
Yes, so the Pew has got its headquarters there. Zimmer has got its headquarters there. Biomet has got its headquarters there. So who knew that Warsaw, Indiana is the orthopedic capital of the world? But it shows that a lot of these businesses congregate. They are linked to universities. They do a lot of R&D, and in the case of Johnson & Johnson, it does create this history of innovative product development.
Is it one that you need to have in your portfolio?
It is, but at the right price. And it has been at the right price, an attractive price the last 2, 3, 4 years. Right now, with growth being a bit of a challenge, and specifically in medical devices having a huge recall in hip replacement, which could cost them billions and billions of dollars, I'm uncertain if this is the right time to be piling into Johnson & Johnson.
That's a concern, the recall of hip replacements.
You see these things every now and then, and obviously it's one thing to take your Toyota Corolla back for an airbag to be fixed. It's a bit more embarrassing. You have to go back to have your knee redone. But it is something.
To say the least, Paul.
Yeah. Look, Johnson & Johnson, though, is doing very well in its other business divisions. So it's a bit tricky. We've discussed this one often. Perhaps we shouldn't stick with it for too long.
All right.
The cosmetics thing, remember, they bought Vogue International. The pharma division's been doing very well because they've had a number of blockbuster drugs come through pipeline and seem to be selling particularly well. I mean, the devices business, one could.
But we are talking about the devices business and the recall. I just want to get your thoughts on that. Is that not a concern for you?
No, look, we've seen recalls with Stryker. It's a small part of the business. They make a provision for it. They're so enormous that a couple of $100 million to be put aside for, paying people and sorting these things out.
This is a few billion. This is quite big it's a bit bigger than the others.
But it hasn't come up for Johnson & Johnson as anything to cause particular concern in terms of forward earnings, no?
Looks as though JP disagrees with you, hot or not?
So, love the company, buy it at the right price, put it away. If you look at the chart of Johnson & Johnson, they're not going to break up anytime soon. That would create a lot of value, unlock the value between the 3 divisions. It's not going to happen. So, I love the company. I don't like the valuation, not hot.
Paul? We know where you stand on this one.
Yeah, I'm going to be hot on this one. I mean, just the ongoing sales of Xarelto and Remicade and Risperdal and all the other stuff that they've got happening there. And we're very happy that they're bigger in hair care as well, so we can own them for that reason too. This part of the business still very good. All the stents and other stuff we haven't talked about, very strong.